Other people like to say, hey, we have support at the 20-day moving average or the 50-day moving average or at the 200-day moving average. And we don't know until we've turned away from it. Now, we're starting to consolidate near this 200-day moving average, but the pattern over here on the right-hand side, the 30-minute time frame, is still a pattern of lower highs and lower lows below a declining 5-day moving average. That makes it guilty till proven innocent. It could turn next week. In fact, Monday, we get rid of this data for the 5-day moving average calculation. So it's possible we could see a turn on Monday or Tuesday of next week that looks like this. It's in a logical place for a potential turn, but we don't have the evidence quite yet. As I mentioned on Twitter and to subscribers today, that I started covering my shorts, and to be aware that complacency goes in both directions, that you don't want to be the last to cover. I had pointed out a couple things there on Twitter, such as this little chart right here showing the emotions on both sides of whether you're long or short. So I was saying, don't be complacent with your shorts. This was 4 hours ago, pretty much right as the market was turning. And that's not to say that I'm calling a bottom here. It's just saying that when we have a momentum move lower at this sustained pace, that it makes sense to start to cover your shorts and look for the potential of an entry. We don't want to buy the dip. We want to buy strength after the dip, because sometimes the dip keeps dipping, and dipping like it has here for these markets recently.